Hello, welcome back to Josh Trade Wars. My name is Joshua, and today we're back to teach you about day trading. And today we're going to teach you on how to actually be profitable. Now, now that you know the charts and how to use it and how to buy and sell, now I want you to be profitable. Because just because you know how to buy and sell, it doesn't mean you're going to start winning money. You need to know how to be profitable. So, and there's two possibilities. There's two possibilities. You can be an RR trader or you can be a win rate trader. Or you can actually be both. But and if you don't know what that means, that's what I'm going to get into right now. So let's get on to how to be profitable. All right, first we have what is RR? RR essentially just means risk to reward ratio. It shows you how much you could gain on a trade compared to how much you could lose on the trade. It helps traders decide if the possible reward is worth the risk or to break even. And break even just means have no loss but have no gain. So you're good on both parts. You didn't lose anything, but you also didn't win anything. And it's better to win nothing than to lose something. But right here is a RR risk to reward ratio. This is like a 10 to 1 risk to reward ratio. So I'm risking $100, which is the red, to win $1,000. And that's a 10 to 1 ratio because um 100 times 10 is essentially 1,000. So right here, I'm risking to only make 1,000. So once it gets 1,000, I'm taking my money and leaving. That's where you can play it safe. That's why we have risk to reward ratios to play it safe and be smart. And if the stock goes below the red or the risk, then I want to cut it out immediately. I want to cut the loss or I'm going to lose more. Now the stock could go up, but it's better to just play it safe. You always want to be smart. See, people say trading is like gambling, but if you play it smart and safe, it can benefit you a lot. So that's why we enable rules and strategies when it comes to trading, so you can play it way more safer and better and actually win money. Now we have what is a win rate. Win rate is the percentage of trade that you make a profit out of all the trades you made. You calculate by dividing the number of winning trades by the total number of trades, then multiplying by 100. For example, winning 6 out of 10 trades just means you have a win rate of 60%. Now this is different to an RR. An RR, you're using it inside the trade, and this win rate determines how you trade. So if I'm winning 6 out of the 10 trades, like I said in the example, my win rate is 60%. So I would win 60% of the trades that I've took. Now I would recommend this using this in a day. So let's say in one day my percentage was at 30%. That would go into these categories, and we're gonna go into these categories right now. So let's say for the day I had a 39, like I said. That would be a F minus, a super bad trader. You want to have a positive win rate percentage, or no, actually, above a 50% win rate percentage. So 50-50 is playing it safe. That's still good. If anything below it, more of the times you're gonna lose trades than win it. And what we want is to win trades more of the times. So we're gonna have to have more than a 50% win rate percentage. So anything below a 49 is an F minus. And I would recommend you to better your strategy, change your strategy, or change what you're doing, or change your mindset. You never know. It could be in my mindset. I will make a video on mindsets because mindset is a big game in the trading game. All right, 50 to 54 win percentage is a C minus. You're not a profitable trader. You're still getting some wins, but not as profitable. If you took two trades and your win rate percentage was 50%, then you just won one trade and you lost one trade, and that just essentially means you're break even. I won $50, but I also lost $50. So break even, I didn't win or lose anything. Now, a 50 to 59% win percentage is C. That's a beginner trader. Beginner traders, start off, light, 60%. So, I'm still making money, but not as much, but still catching some winners. A 60 to 64 1% is intermediate trader, or B. This means you're getting better. A 65 to 69 1 percentage is a B plus, advanced trader. Now, a 65 to 69 doesn't seem as much, but it's really hard getting a lot of win percentages. That's why it's important to not take as many trades. When it comes to trading, the more doesn't mean the better. You can take one trade and be done for the day, and then boom, you're a really good trader. If you take 100 trades a day, that is just really, really dangerous because you're risking a lot. You're going in a lot. You want to play it safe in the market. And when you're trading in the market, you actually don't want to be in the market as much. You just want to get in, get out, get your money, and just be happy for the day. And that's why you'll see like a low, not as low, but not as high. So 65, 69, you're probably thinking, oh, I want an 80. And 80 is a very hard thing to achieve. Even some traders don't even have 70. This is why 65 to 69 is an advanced trader, a B plus. Now, if you have a 70 to 99 win percentage, you're a professional trader. So if you're in 71% winage, you're a really good trader and a professional one at that. And like I said, it's really hard to do it to even get 70% because you could win some trades, you can lose. Like trading is very difficult. It's hard to explain, but once you get into that game, you're gonna see that you're not gonna be winning as much. Maybe you'll have that beginner luck, but as time goes on, as you commit to this, you'll see that it's very hard and you'll be losing most of the time. So that's why a 50 to a 70 is a good, it's like, no, a 55 to a 70 is a good area on win percentage on where you want to be at. And if you have a 100% win percentage, you're the best trader. You won 10 out of 10, you won 10 out of the 10 trades that you took. And that's really, really impressive. You did not miss one time. Now, what you can do is just use this over the day. And I'm going to show you what I mean right now. As you can see right here, I used to track my trades. This is from April all the way to August. Yeah, I used to track all of my trades, giving myself a rating, the day's rating, how well I did for the day. And sometimes I'll collect it for the overall week. So if you start right here on April 8th, on Monday, I won $21.60. I took only 2 trades, with both of those trades coming in, good. I won on both of those trades. So I received myself a 100% accuracy. I was 100% accurate on that day. And this is why ratio is very important. As you can see on this day, let's focus on Tuesday or April 9th, right here. I actually lost $700. And you might be asking, lost $700, but right here you have 3 winning trades. A plus 3 means winning trades, and minus 1 means a losing trade. This is why a risk to reward ratio is very important. You can still be a win rate trader, but a risk to reward is very, very important. See, I won 3 trades, but then I had this one trade that took everything away because my risk to reward ratio was awful. The risk to reward, I think on this day, my risk, the stock went below my risk and I kept risking. I thought, oh, hold on, maybe the stock will go back up. Let's give it a minute. So, but it kept going down and I kept risking, and there was a moment where I was like, okay, this is too much. I lost too much money. I'm gonna just have to cut it right here. Now, if I listened to my risk to reward ratio, I would have minimized the loss and possibly come out with a profitable day. But as you can see, I did not, and lost almost $800 on that trade, even though I won 3 out of the 4 trades. I gave myself a 75 win percentage, an A plus, but I still did bad on that trade. On that day. So win percentage can mean something, but it doesn't mean everything. That's why you have to have. I recommend having a win percentage. You calculate your win percentage. You note this. If you're a beginner, I recommend you doing something similar to this. Track your trades and track how well you did. So in a notebook, you can say on April 9th, I did this, and I think I did really well. And if you had a negative day, I did this, and I know it went bad. And you explain why you did it and what you did, so you can improve yourself and become better. But yeah, on that day, bad day, this is why you have to have a risk to reward and a win rate percentage. Make sure your win rate percentage is good and your risk to reward ratio is good as well. But let's look into April 8, 9, 10. On 10, I had a 56, minus $25, 16 trades, see, and even though I took a lot of trades, I still lost money. So 9 trades went good and 5 trades went bad. That gave me a C and a 56% win rate. And if you see look what a C is, we can see that a C is a beginner trader. So, I was having like a beginner trader day right there on Thursday, or I'm pretty sure April 11th, if I'm not wrong. I had a good day where I had not as high as a win percentage, like 70. I just had a B, but look how much I gained. I gained $680 on that day. I took 5 trades. 3 out of those trades I won, and 2 trades I lost. I minimized the risk. See, when I was losing money, I just cut the loss because I didn't want to lose as much as I was losing. I wanted to just risk it and cut it off right there. But when I was winning, I was winning a lot because my risk to reward ratio was very, very good. I was risking a lot, but I didn't continue going on. I could have made, let's say, $1,000 that day, but I just cut it right there, 680, and I just stopped for the day. You don't want to become addicted to this. You don't want to stay on the charts forever. Once you're up for the day, you want to know, hey, is it quitting time? If I'm up $100, should I just call it quit? Because if you go back into the market, you're risking that $100 you already won. So do you really want to go back? It's a question you should be asking yourself. So have a limit on how much you want to win for the day. Have an aim on how much you want to win for the day. Do you want to win $50 for the day? And once you hit that $50, that's when you call it quits. Or do you want to lose maximum $50 for the day? So if you lose $50 for the day, you're gonna have to say to yourself, hey, call it quits. I'm done over there. I lost too much money. That's the maximum amount of money I'm willing to lose. I'll call it quits. So yeah, these days the Wi-Fi wasn't working for like 3 days straight, so I had to, nothing right there. But yeah, this is it. Stock closed. Yeah, stock closes on holidays most of the times. Even on some days I didn't trade because the stock wasn't wasn't looking good for me. You don't have to force trade. If there's nothing you don't like seeing, don't trade at all. But yeah, this is everything I had. Wow, I did not trade for a week. Okay, I wonder what happened there. But you know, probably because I didn't see anything I like, so I just didn't trade at all. But yeah. Oh no, I erased it. It's gone. Sorry, I'm getting distracted. But yeah, that is how I do it. I recommend you doing the same. But let's get back into the slides. Now we have like now we have this. You might be asking, what am I looking at? This is how to give yourself levels, like what level you are as a trader. Are you a non-profitable level trader? Are you a beginner level trader? Are you an intermediate level trader, experienced professional? We're gonna see right here. So I want you to have 6 weeks of calculated and note-taking trades. For 6 weeks, for 6 consistent weeks, you will trade and you will note those trades. In those trades, was your win rate 70%, 65%, 60%, 55%, 50%, 70%? If 70% and more, then you count it as right here. And these count as points. So if my win rate was 65%, I would get 4 points. If I had 6 consecutive weeks of profitable trading, so for 6 weeks in a row, I had a profitable week, so I was winning money for that entire week. That would have a 6 points. So 4 plus 6 is 10. So we're landing on the experience. We just need 3 more. And if I was using a 2 to 1, not a 1.75 ratio, but if I was using a 2 to 1, that would give me 5 points. So 5 plus 10 is 15, and that will land me on professional trader. So for 6 weeks, you want to trade. Note those trades. If you have a red week, if you lost money on week 3, that means you will give yourself 3 points because you were only profitable for 3 weeks. And that's what you want to keep resetting. You want to keep hitting 6. And the ratio right here is based on your opinion. You can have a 1-to-1 ratio or a more than 2-to-1 ratio. So like a 3-to-1 ratio or a 4-to-1 ratio. You know, the more money you're risking as a reward, the more money you're risking to lose, because the stock can always go up. So if you're 2-to-1, you're playing it safe. But if you're 3-to-1, you're playing it more dangerous, more and more and more. But it's all up to you. It's how your strategy works. But in -1, you're actually it's like I'm risking $100 to lose to win only $50. That's a negative ratio. You're gonna, if you were to lose one trade, which is $100, and win another trade, which is $50, you're still down $50. This is why I recommend starting at a 2-to-1 or a 1-to-1, so you can break even on 1-to-1. And if you lose one trade, if you lose 2 trades but win 1 trade, you're break even, playing it safe. But yeah, I recommend using this. So take a picture if you want, and using it to plan to see what trading level you are. And here, right here, is something simpler to understand. It's essentially the same thing as this, but I guess in rows, way more simpler to understand if you need to look at it. So take a picture of this as well if you need to. And I recommend this is how you become better. So you keep going, you keep trying until you become better. And yeah, that is it for today's video. Thank you for watching. If you like it, please comment, like, subscribe, ring the bell so you don't miss any more. And yeah, thank you for watching, and goodbye.